Hello? What's up? Do you want to know what the stock market is? Before that, please support this channel by subscribe, like, comment, and share. Thanks before? Let's get started. What is stock market? A stock is a type of security that represents an ownership share in a publicly traded corporation. When you own a stock, you are a shareholder in the company and have the right to vote at shareholder meetings and receive dividends. The price of a stock is determined by supply and demand in the stock market, with the price fluctuating based on a variety of factors, including the company's performance and the overall state of the economy. Stocks are traded on stock exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq, and can be bought and sold through a brokerage account. Some people invest in stocks as a way to generate income or as a long-term investment to grow their wealth. The stock market can be a volatile place, with prices fluctuating rapidly based on a variety of factors, including changes in the economy, changes in a company's financial performance, and even global events. This volatility can create risks for investors, as the value of their investments may go up or down quickly. One of the biggest risks in the stock market is the possibility of losing money. If the value of a stock or the overall market goes down, investors may see the value of their investments decrease. This risk is known as market risk, and it is an inherent part of investing in stocks. Another risk in the stock market is the possibility of fraud or deception. Some companies may engage in practices such as insider trading, or misstating their financial performance in order to manipulate the price of their stock. This can lead to losses for investors who buy the stock based on false or misleading information. There are also risks associated with buying and selling stocks, such as transaction costs and the possibility of making mistakes. For example, if you buy a stock at the wrong time or pay too much for it, you may end up losing money. Overall, the stock market can be a risky place, and it is important for investors to understand the risks and to do their due diligence before making any investment decisions. It is always a good idea to consult with a financial advisor or professional before investing in the stock market. There are several risks associated with investing in the stock market. 1. Market risk. The value of stocks can go up or down based on a variety of factors, including changes in the economy, changes in a company's financial performance, and global events. This means that the value of your investments may fluctuate and you could potentially lose money. 2. Credit risk. Some companies may not be able to pay the dividends or interest on their stocks or bonds, which can lead to a loss for investors. 3. Liquidity risk. It may be difficult to sell certain stocks or other securities quickly, especially if there is not a lot of demand for them. This can make it harder for investors to access their money when they need it. 4. Inflation risk. Inflation can erode the value of your investments over time, particularly if the returns on your investments do not keep pace with inflation. 5. Political risk. Changes in government policies or regulations can affect the performance of certain industries and companies, which can impact the value of your investments. 6. Fraud risk. Some companies may engage in practices, such as insider trading, or misstating their financial performance in order to manipulate the price of their stock. This can lead to losses for investors who buy the stock based on false or misleading information. It is important for investors to be aware of these risks and to diversify their investments in order to manage their overall risk profile. Consult with a financial advisor or professional before making any investment decisions. Despite the risks, there are also many potential benefits to investing in the stock market. 1. Potential for growth. One of the main reasons people invest in the stock market is the potential for their investments to grow over time. While there are no guarantees in the stock market, a well-diversified portfolio of stocks has the potential to generate returns that outpace inflation and provide a source of long-term growth for your financial portfolio. 2. Dividend income. Many companies pay dividends to their shareholders, which can provide a source of income for investors. Dividend income can be a particularly attractive option for retired investors looking for a steady stream of income. 3. Professional management. Many investors choose to invest in mutual funds or exchange-traded funds, ETFs, which are managed by professional fund managers. These managers research and select stocks on behalf of the fund, providing investors with the benefit of professional expertise without having to do the research themselves. 4. Potential for higher returns. While there are no guarantees in the stock market, historical data has shown that stocks have the potential to generate higher returns than other asset classes, such as bonds and cash over the long term. Overall, while there are risks involved in investing in the stock market, there are also potential benefits that can make it an attractive option for many investors. It is important to carefully consider your financial goals, risk tolerance, and investment horizon before making any investment decisions. Thanks for watching, and see you next time.